We're going to talk about what caused stocks like JP Morgan come crashing down by as much as 5%. It wasn't just JP Morgan. We look at Goldman Sachs. It was also down 4.39%. We take a look at XLF, down 1% on the trading session. We come over and look at the fear and greed index. We are still in fear territory, sitting at 39. And guess what? Tonight and tomorrow are going to be very important. Tonight, we have the presidential debate. And then tomorrow morning at 8:30 a.m., we have the core CPI data coming out. Let me know in the comment section down below. Do you guys think the CPI data is going to come in hot? Or is it going to come in nice and cool? And if it does come in cool, does that actually mean that we are in a recession? Growth has slowed? Because let's not forget, the yield curve is still uninverted. The yield curve has been steepening. That in alone is normally a warning sign recession is very, very close. Now we look at how the indices fared across the board. The Dow was down 92 points, Nasdaq up 141 points, S&P 500 up 24 points, Russell 2000 down 0.16. Now, if we come over and look at advancing issues versus declining, very evenly split. Advancing issues, 49.4% of issues advancing on the day. Then as we come over and look at the sectors across the board, yikes, energy absolutely getting destroyed, followed by financials. And I got to be honest with you, I am not upset to see an energy on the move down. That means lower prices to come for us at the gas pumps. We look at crude oil today, suffering a 3.67% decline. And we talked about this a little bit during today's live stream. However, when we drop down to the 4-hour chart, notice what we started to see. MACD indicator peaked to the downside right over here, which correlates with this little consolidation area. And then now we have went substantially lower, but the MACD indicator at this moment is not confirming those lower lows. So does that mean crude oil is getting ready to bounce in the very near future? Now, if we start looking at where crude oil could possibly bounce to, we marked this off during the live stream as well, and that would be about 66.67, 66.93. That's the first minus development area. The next one would be up here about 67.22, all the way to 67.52. And what I like about this secondary minus development area up above is if we look left, we also have structure right over here and even further to the left. So I think that could act as a magnet in the very near future. Now, when we look at the dollar index, we were also talking about this today as well. It's looking more and more obvious like this is likely going to be a double bottom pattern. The first area we're going to need to get through, though, is not only the swing point right here, but then above this little structure breakdown point. If we can clear 102.53, that'll open the gates all the way up to 103.32. Now, when the dollar is rising, normally that's going to put pressure out here for the precious metal gold. But then we look over here at gold. Gold having a decent day on the way up, trying to make its way up towards that ABC completion at 25.86. And no, nothing has changed in my analysis with gold. I'm still seeing this same old, same old. However, if we look at one of the two things that Jamie Dimon had to say today, Jamie Dimon says succession planning for JP Morgan Chase is his top priority. Now, is that the reason that we saw JP Morgan stock come crashing lower today? I'm not so sure about that. What about this one Jamie Dimon had to say? Jamie Dimon says the worst outcome is stagflation, a scenario he has not taken off the table yet. If indeed we go into a period of stagflation, watch out, all bets are off. But wait, that's probably still not the reason why JP Morgan stock came crashing down lower. Goldman Sachs stock came crashing down lower, and a majority of the banking stocks suffered a very bad beating out there today. However, we look at this article right here, JP Morgan, Goldman Sachs shares move sharply lower on Solomon's deal, comments revise capital requirements. Now, what it goes on to say is bank stocks fall after the Goldman CEO comments at a conference and the Federal Reserve's plans for reduced capital requirements. And I think this article is going to be the main reason why all the bank stocks were in the red today. However, if we jump over and look at some of the technology stocks like Nvidia was able to eke out a gain up 1.63%. Then we jump over real quick. We take a look at the volatility index. The VIX was down 1.9%. However, I want to caution you guys on something real quick. Yesterday, we saw the VIX down over 10% on the session, which indicated that either today or tomorrow was going to be an up day for the VIX, aka stock markets going lower. And if that stat is going to hold true, is that going to be because we have a very negative reaction out here to the CPI data that comes out tomorrow? Now, if we come over and look at Microsoft, had a nice bullish day out there today, up almost 2% on the session. Tesla back on track to go ahead and try to make its way up towards that ABC pattern completion. Now, yesterday, we had an inside day, but Tesla was unable to make it to the top of the Friday's candle or even towards the bottom. but at least it's a move in the right direction. And tomorrow's news at 8:30 is really going to hold a lot of keys. We look out here at the diamonds, the Dow Jones. What do we see? Forming a hammer candle today. Now, the MACD indicator on the daily chart does not look good at this moment. On the 4-hour chart, which we were talking about during the live stream, we can see how the MACD indicator is starting to flatten out. Then on the 1-hour chart, we can see the MACD indicator is crossed to the upside, but it's going to be critical. We make it up and out of this area. We got into the gap. However, the gap was not filled today. As we look at the 30-minute chart, the MACD indicator is just crossed to the upside. Now today, we came down below value area low, and just towards the end of the day, we were able to get back above it. However, we were never able to eke out all the way back towards the point of control. Now I want to make everybody aware, Apex 7 80% sale off all their valuation accounts, passing as little as 1 day, and $85 activation fee on all accounts. This sale ends tomorrow. So if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Then we look over here at small caps forming a hammer candle. And this is something that we talked about during the live stream as well. The fact that we had these 2 days, we wash it out with a big hammer-ish candle today. I really like this. I think that's very bullish. We look out here on the 30-minute chart. Here's that low that we were able to sweep. Now we've been able to recapture it. So now are we going to see the small caps run all the way up here to about 210.97, something we most certainly want to keep on our radar. Then we come over and look at the QQQs. Also having an update today, up 4.2 points. When we look at this, we have a little bit of a hammer candle. They try to slam it down only to bring it back up. One of the areas I do want to focus on is going to be this high volume area at about 462.50. If we break above that, then I'm looking to see, can we get into this minus development area? Now, if we pull a Fibonacci retracement, swing high, down to the swing low, that also correlates very well with the 50% Fibonacci retracement level. So we need to keep an eye on, see how this develops. Now here on the 4-hour chart, you can see the MACD indicator trying to get a cross to the upside, not there just yet. And on the 1-hour chart, we're making a very good separation of the MACD lines, making a beeline straight up. However, if we cannot get out of this area, that is going to be problematic, because now as the MACD indicator gets towards the 0 line, if we're still down near these lower levels, that could be nothing more than a recharge point for another leg lower. Out here on the 30-minute chart, this is the area that we identified in this morning's live stream. The first 30 minutes of the live stream, we do all of our market analysis. And this is one of the areas that we identified with the pre-market prep. And look where we came up to the first time. Boom, we reject right back down. Then we come back up into it for a second time. All day long, the MACD indicator was bullish on the QQQs. And we come over and we look at the futures markets real quick. What do we see out here on the 4-hour chart? One of the things that we were talking about was the fact that we're probably going to try to make a run towards 19,938. However, when we look over here at Bookmap as well, and we scroll up here, this is one of the areas we talked about. Before we get to that area, we're going to need to clear above 18,900. We can see there's 181 contracts sitting at that price point. So today on the live stream, we were talking about if we're going to target 938, we need to be very cautious as we hit 18,900. Well, luckily for us today, we did not make it all the way up towards that area, but that's still going to be a point that we want to see if that order is out there tomorrow morning. Out here on the daily profiles, what do? Well, you can see we closed above value area high. So what does that mean? That means within the next 2 trading sessions, we are likely going to come back and retest that level, which comes in at 18,798.00. The point of control will come in at 18,758.50. Value area low coming at 18,642.50. So how do I want to handle this? Very easily. I want to target this area. So any sell side opportunities tonight on the live stream, this is an area we'll target. We break value area high. I want to target the point of control, and then down here towards value area low. But just note, all right, as a friendly reminder, this is more of an aggressive play. If we're above value area high, you want to try to stay on the long side of the market, but we do have something working in our favor. We have a little bit of a minus development area right here as well. Now, the first time that we come into it, normally we'll go like this, and we'll reject and go right back out, or we'll come into it and then just sit there and consolidate, which also would, 1, act as a magnet, and then 2, we can look for this for a push up and out, possibly coming all the way back up here towards that untested point of control from last week. Now we come over and look at the SPY. Notice we had that hammer candle today. We wicked it on the way down. Buyer stepped in and they brought it right back up. On the 4-hour chart, MACD indicator is based out. And then on the 1-hour chart, you can see the MACD indicator has been crossed to the upside. This is dangerous. We need to be able to push up and out tomorrow. Hopefully the CPI data will be exactly what we need. On the 30-minute chart, you can see the MACD indicator is crossed, is above the 0 line. However, we're still down at these lower levels, which means we're susceptible for the market to come back down. Now, this also applies for the Nasdaq as well. And if we look right down here, what do we have glaring right below us? We have a gap, and that gap to be filled would be all the way down here, somewhere in the ballpark of about 540.41. So if we start to see weakness tomorrow, this is going to be a target to the downside. To the upside, however, we do have further tests. I'm going to extend this minus development area out just a little bit more, anywhere from about 552.36 to about 552.71. If we get a bullish reaction, I want to look for the market to push up towards that level. But notice on the 30-minute chart, we've had 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row, which really leaves us susceptible to, in the very near future, getting some type of knee-jerk reaction back on the way down. Now, as we come over and look at the futures markets real quick, what do we see? Well, I still believe that we're trying to make our way up towards this point of control. We've already been able to retest the edge of this distribution area right here. We've made it back over to this high volume spike over here in the profile. So now this is critical because the first time we come into this minus development area over here, a lot of times we'll pull back a little bit, and then we'll see if we build more calls that come up towards 55.32. From a weekly perspective, we're still above value area low after already being below it, which is bullish for the market as long as we can stay above that price point. Then as we come over and look at the daily profiles real quick, what do we see? Well, we closed right near the high of the day, right near value area high at 5503.75. The point of control will be 5496.75. Value area low will come in at 5477.75. So again, this is going to be very clean, very simple. How do I want to handle this? Very easy. All right. One, as long as we stay below value area high, I want to look for downside targets. One being the point of control, but then also right over here towards this minus development area. All right. One, we could come down towards this area here and then either consolidate or push up and out of that area. Something I'm going to be looking for, for tonight and tomorrow. So I am looking for a little bit of weakness early on in Asia, and then we'll see, can we push up and out of this area? Now, as we look at this, if we break value area low, where are we likely to go? Well, then we're likely to go back down towards the candle bodies from today, and that brings us all the way down here to about 54, 56. Anything below that, keep in mind, we have very poor structure on the way up right here on the profile, and that would make sense that when we come all the way back down, try to build out this profile a little bit more, aka come back and fill the gaps on the SPY. Now, if you want to learn about my fun and futures micro scalping rule, check out this video right here.